Hello and welcome to another episode of the Finance Freaks. I'm Bruce, and I'm here as always with my buddy Steve. Steve, say hello.
Hey, what's up, guys? Hello.
Guys, we're going to spend an awful lot of time on stocks today and a little less on global events because there's just so much going on in the market. But first, I have to tell you, I went for a staycation to Miami Beach this weekend past. Had a wonderful time. I really did. I ate at a place called Poppy Steak. It's south of 5th on 1st Street in Miami Beach. It was excellent. I mean, the food was exquisite. The service was even better. I felt like they had more waiters and busboys than there were people. Okay, and it was like a club, only with unbelievable food. The only negative is it was by far the most expensive restaurant I ever went to. Most entrees were between $200 and $400 each. I had like the cheapest entree on the menu, which was a Wagyu skirt steak. It was $100 for a piece of meat like this big, fucking crazy. It's crazy. But I recommend it, but, save up because it's a lot of money. But anyway, I wanted to tell a story. Apparently, we here at the Finance Freaks saved a life, or nearly saved a life. So I get a call from a buddy of mine I haven't spoken to in a long time who lives in Miami. And he's like, hey, Bruce, I got to tell you a story. And I said, well, I'm at the Edition Hotel at 29th and Collins. I know you live close by. Why don't you come and see me? I haven't seen you for a while. So he came and saw me, and he said that his father, who's a truck driver, was suffering with back pain very, very bad. And then one of his legs stopped functioning. It just dangled. He couldn't do anything with it. And he couldn't walk. He's like, I had to carry my father to the doctor. It was just unbelievable. And everybody said, there's nothing wrong with his back. Everything looks fine. He goes, and then you did a podcast where you showed the PICC line in your arm with the antibiotics, and you said I had a spinal infection. He goes, I put my father back in the car. I took him to the doctor, and I said, he's got a spinal infection. And sure enough, he did. He, like me, because it had gone so long undetected, he was like a week away from sepsis, which is death. I was really close. I had multiple abscesses in my muscles around my spine, which could have, caused sepsis at any time. But anyway, yeah, listening to the Finance Freaks, his father is now on the mend and back driving a truck. So that's a good story. That's a good story.
That's actually fantastic. I thought you were going to tell him something like we saved his life by buying the right stocks, but it had nothing to do with that.
No,
it's all about
no.
medical.
Yeah, it's just my misfortune turned out well for somebody. So listen, my back still sucks. It'll never be good. I experience extreme discomfort all day long, but I can move around. I'm just thankful that I'm better. I'm not good, but I'm better, and I'm thank God. I'm very, very grateful.
Well, that's good.
Yeah. So, wow, what a change in the market. Alphabet, second quarter earnings, revenue up 24%. iCloud surge, 82% increase in iCloud usage. And the stock's off 23 points today. Steve, what do you think?
Well, before we do that, we can't forget to do the disclaimer because we don't want to have an issue. Until we have, hey guys, until we have an actual formal one, we're going to say this. This is just an expressed opinion of Bruce and myself. We absolutely do not have any guarantees. Past performance has nothing to do with future performance. No guarantees there. We're just talking about what we do, how we do it. That's up to you to decide what you want to do, but do your own homework. We're urging you. That's all. Now let's go with Alphabet. You
ready?
If
you still feel that you were harmed by the show, it was Steve, not me. Okay.
Okay. Right. Medical issues, go to Bruce.
Yeah.
When you have a problem with a stock, I will be hiding. Okay. Don't worry.
Okay. So Go ahead. Google Alphabet.
Right. Listen, great numbers, but they're going to spend an additional 25% more than they thought for 2027. Now, if you remember Buffett, who took a position in Google at about 275, 280, whatever, how long ago it was, He said on CNBC, I don't know, a week ago, he goes, I don't care if they keep spending. He was very like, it's fine, let them spend. We need to spend. So he obviously knew that what was coming was a big number, right? So they're going to spend more. So who does that help? It helps Micron. It helps the AI stocks. That's why those stocks, we're going to talk about it today. What a difference in the NASDAQ versus those stocks like Micron, right? So it's going to help those because they got to spend, but it kills the shit out of the earnings power of these companies. So what do you think Google's going to do? They're going to say, all right, we're going to spend another $25 billion more than we thought. Okay, that will help them in the future, but short term like today, stock is down really hard. Okay, do you buy it down here? Absolutely. Google is a company that will be there forever, as long as I'm alive. I mean, hopefully another 30 years. But that's a stock you buy on weakness. That's it.
So, Steve, the next one is Tesla. But before I get into Tesla,
Yeah.
last week we said, oh my God, look at this. Back from 500 and change, Meta is at like 680. And it's down to 600 again. It's either because nobody really knows what Meta is doing, or maybe they don't know what they're doing. They seem to be switching directions. Every time they make a release. You buy it here, I think.
You want to go Meta?
Yeah.
All right. Incredibly smart company. Everybody knows this. They absolutely, you're right. They are switching gears constantly, adding more CapEx spending to certain areas, trying to stay ahead of competition. Right? They absolutely are looking to move the needle for the next year. I don't think they give a shit, Bruce, at all about the stock price. I don't think they care. I think they only think about how do they create value for the company in the future, not right now. So if you're a CEO or a CFO and you're sitting there staring at your stock price, you're doing the wrong thing. You need to be spending every waking moment of your life on figuring out, are you in the right direction and are you spending the money the right way in order to create the right value for your shareholders in the near future so that you can actually see a stock price appreciation in a year from now. They're not thinking right now, right? So I think that Meta is going to be constantly like this for the next year until they finally figure out, did our spending create enough value for the stock price to be $800, right? So expect it, people. Buy on weakness. Don't sell it on weakness. Don't, if you want to sell when it pops 20%, that's what you do. But don't sell on weakness. Buy on the weakness.
I get it. Although I had a very big position in a company, a military supplier back in the day called Allocation, and I used to be, I used to really push the CEO hard because they'd be making money if he didn't keep taking these non-cash write-downs, and it always hurt the stock, always hurt the stock. And I used to tell him, he said, well, my job is this. And I said, no, your only job is to increase shareholder value. That's what it is. And my value has not increased in 2.5 years. So,
right, but that stock, what was the price of that stock?
It was a $4 or $5 stock. It was a $4 or $5 stock.
Right, huge difference in the world,
Yeah.
right? $4 or $5 stocks are $4 or $5 for a reason. Okay, when you talk about a $600 stock, you notice these large cap, these the like we said, the Mag 7. Okay, these are stocks that they've got powerful earnings power that you don't even really see it until it actually their initiatives come to fruition. So I will give Meta leeway because I remember when you took this thing public, Bruce, and I was sitting there with you, and I remember the private placement beforehand, and I remember the price was like
30.56.
How much?
30.56. We had
Yes.
$20 million worth of the stock at 30.56.
And I remember it. I remember the day, Bruce, I was sitting there in the cubicle. I remember it exactly when it was doing it. And I was like, wow, $30. I'm like, all right. Well, I was like, who is it? What kind of company is this? I didn't even know shit about the company, right? At the time, right? And I was like, wow, I should look at this thing. Lo and behold, at $600. Now, how long ago was that, you think? That was Rockwell
2012.
Sucker. What year?
2012.
Okay, so we're talking about 14 years ago. So think about it. Your house appreciated 100% maybe
Yeah.
in the last 12 years, 14 years. So that thing has now, what are we talking about? 1,000, well, let's talk about it. It's 10, that's 2,000%. Okay,
Yeah,
it's
so your
worth
house has appreciated in lockstep with inflation. You have definitely outperformed with Meta. Definitely
it. Right,
outperformed.
right. So give him some leeway.
Yeah, yeah.
Right?
Let me tell you,
And he's got red hair on
people
top
are
of it.
never happy, because it went down a little bit before it went up, and I had customers threatening to sue me. They were going to sue me, and and finally, and I was supposed to get 20% of the profits that people made. I ended up sending everybody their stock and say, do what you want, because no matter what I did, people were unhappy. So when the stock was $78, I sent everybody their stock. I had one guy call me recently who put like 100,000 in, and I don't know how many million he ended up with. He's like, I never sold it. Thank you.
Thank you. Where's my 20% profit?
Yeah. But all right. So, along with Google's announcement, Tesla's second quarter earnings miss, beat on revenues, but the cash burn rate is, even though it was less than expected, I think it scares a lot of people.
100% scares the shit out of people, Bruce. And he did say though that what was I don't know the exact wording, but he did say the door is open for Tesla to be bought by SpaceX. Oh, I know what he said. He said every day our technologies are crossing each other at such a significant pace that why not take over Tesla? That's what he said.
Yeah, he even said in another clip that a lot of the engineers are interchangeable. They go back and forth.
Yeah. So you know what? It's fine. It's all good.
Yeah.
So,
Listen. I own it at 259, and I never sold it at 500. And now what is it? 350.
all right. So it's 350
325
something now.
Yeah, 325.
Yeah. But you can't. Hold on. I'm going to try. You can't look at the stock itself. You got to remember, we say 75% of every single stock's move is the overall market, right? Where the market is. Take a look at what the market's doing right now,
Yeah.
right? There's no buyers at the moment.
So, all right. There's been a fair amount of commentary about the Philadelphia Semiconductor Index entering bear market territory. Despite a 20% pullback, me personally, I don't feel like the semis are in a bear market. Do you?
No, I think that what you have is, listen, the bear market is a great term that's used at the 20% down from the high. But if you rallied up 1,000%, let's say, right? Some of these stocks were trading at, 7, 8, 15, 8, $22, $30. Now they're trading at $300. Okay. If you rally up that much and you get a 20% pullback, does that really mean that you're in a bear market where the earnings power, what creates a bear market? What creates a bear market is generally that the future outlook of the whatever sector you're talking about is the earnings power has now decreased by an exponential number. That means that if you had the industry trading at, let's say, 29 times earnings, and now it's only going to have earnings power of 12 times earnings, yeah, you're going to have stocks that come down. But that's not the case with this. The earnings power, it's still strong. It's just a group that rallied really, really strong, and you're getting a rotation, and people are taking profits, and it's okay to take profits because they never know when to actually stop taking profits until finally the stocks bottom out. So there's no bear market there, Bruce. It's just a term that's used, and you should be buying these stocks every time that they get clobbered, you add a little bit more to it, is what you do.
I agree with you there. It's all relative. I mean, if you got the year over year on the S&P at 8%, and then you have a 20% pullback, you're in a bear market. But when you have the gains that we've had in these semis, a 20% pullback is just a healthy retracement, I think. So I don't see any problem. So instead of just talking about the semis. Now let's do a bull market check in general. Bull markets don't end because somebody said it's no longer a bull market. There's always conditions that support the deterioration. But the way I see it, Steve, is inflation is cooling. The Fed sounds less hawkish and less inclined to tighten this year. I don't see a deterioration. Do you?
No, I don't see any deterioration at all there. I think that it's very simple. I wake up at 3 o'clock in the morning. I look to see what the futures are doing. I see where oil is, and then I look to see, because it pops up on my feed at 3 in the morning. Of course, it pops up what commentary was made by Trump during the night or late the night before, and that's what's dictating this market. You know, technically, the Nasdaq has been consolidating sideways. You're only getting these types of really bad gyrations like today because look at what's going on. The war is way longer than expected. Now I mean, I know we're going to get into this in a few minutes, but there's all these different conversations that are going on between Hegseth, Trump saying, I'm going to, he's crazy what he says in the respect of why do people want to buy anything when he's coming out with with these quotes that are scaring people. Really, that's what's happening. Maybe it's warranted, maybe not, but that's what's going on. So yes, this is not a bear market. This is a market of fearful people based on what he said. If he shut up and never said another word for a month, the market would be up another 10%. It wants to go higher. It can't with this kind of commentary. That's what's happening.
I agree. So what typically ends bull markets? Earnings misses, falling earnings revisions, liquidity tightening, which we haven't seen yet. What else? Just a restrictive monetary policy. I mean, Jamie Dimon came out and said the current environment is as close to as good as it gets.
Listen, those bank earnings were sick, Bruce.
Yeah, we're gonna go through them.
There was a lot of trading that they made it on, but I mean, those were fantastic numbers. Bank of America, Goldman Sachs, of course, Goldman Sachs, obviously it's about trading. I get that. They're not a money center.
Citigroup was good.
Morgan, but these numbers were great.
Yeah.
Right? So I don't see any of those problems. When the last bull market that ended into a bear market was all about, and I'm not going to, I guess you could say it was during COVID, but COVID was, come on, that was once in 100 years, even if you ever get that kind of a thing again. So let's put COVID aside. Prior to that, it was rising interest rates to a level that were so high that inflation was rampant. That's what brought a market down, right? We're not in that place at all. So we are now, again, nobody has a crystal ball to say, I know that in 6 months from now, we are in a recession. Nobody knows that. So at the moment, you go with what you see. What you play the market that's in front of you. The market in front of us is low inflation, going lower, a Fed that actually seems to be pretty confident in what they're doing, earnings that are insane. So does that create a bear market? No way, Bruce.
I agree. And the reason we mention that the banks killed it, why does that matter? Banks give the first read to the U.S. economy. They talk about credit quality, loan demand, and rate sensitivity, and these guys are making money hand over fist. So that's a very, very bullish sign for the economy. I did, because you mentioned it, Hegseth was on. He was getting grilled by Congress. He said the Iran war is going to cost about $37.5 billion. It's a lot of money, but it's, compared to what we spend on some other things, it's a drop in a bucket. But I was thinking, like, why don't we just get it from the Somalis in Minnesota? I mean, they they're cash rich right now from all the social services scams that they put forth. So we could pick that up like that from the Somalis. In the meantime, the war, and I wouldn't say I'm a hawk, okay, but I believe in a strong defense. And I have said many times on this podcast, Steve, that the Iranians don't understand negotiation. They don't understand that. If you're talking to them, you're losing. They only understand the stick, It's like a horse. They understand the switch and a lump of sugar, good and bad. There's no in between. They don't have a dimmer switch, So the same thing with the Iranians. And I think that what we're doing is really setting them back, decades and decades and decades. But here's what they're like now, okay? I squash water bugs. I squash beetles all the time. I step on ants. Why not, right? I leave bees alone, even though I can kill bees easily, but they sting. They sting. And that's the residual capacity of Iran right now. They still have the ability to sting and, cause global turmoil. I wonder if that's going to last. I don't know. I don't know if this this campaign that we are launching right now, this campaign of bombing them every night and taking away their vital infrastructure is going to prevail. I would think eventually you say no mas, eventually. But I mean, Germany bombed the hell out of England, destroyed London, and London didn't say no mas. They just didn't. So I don't know. I wish I had a clearer thought on it. I don't think we're not doing the right thing. I think we're doing the right thing. I just don't know if it's going to get us the result that we're hoping. I don't know.
So far, it is not, and it is not. When this war started, everyone was thinking because they were being told this is going to be a 4-week war. I think is what it was. 3 or 4 weeks, we're done.
Yeah.
Well, I think we're 4 months into it now, maybe, right? And no end in sight. You can't. I said it before. I'll just say it again. I think Trump underestimated the hatred that the world, that type of a world has against democracy. And they will never give in. They'd rather die, because to them it's better to die than it is to give in to the Americans and democracy. That's not what they want to do. So they'll never. I mean, look at what Ukraine and Russia. Russia thought it would have been done, 3.5 years ago. It's going on. This thing looks like it's never going to end, right? So sometimes you're talking about respect. They will never give respect to the Americans. And unless we completely destroy the country where there is nothing left, and I mean nothing left, not hitting certain spots, but leveling a whole country, they're never going to give in, right? So I think at some point, unfortunately, what may happen here is we may give in, right? Isn't there a possibility? Midterm elections are coming. Trump may say, I don't care about that. That's not true. They care about that. So they may have to give in a little bit in order to get this thing resolved. What do you think of that on the political side?
I think Trump is standing there and he's got this pit bull named Bibi that is foaming at the mouth, showing his teeth, growling, and he should just let him go, because what that pit bull will do was anybody else who's left in power in Iran will be gone. It will be gone. There'll be a huge power. As much as there's a power vacuum now, there will be a huge power vacuum. So I see that as an option too. And I understand the reasons for keeping Israel at bay and keeping them out of this, because a lot of people, if Israel's involved, just will not support it. But that might be an option. But it's complicated. The world is a dangerous and complicated place, for sure. And I've said this, they talk about the world court indicting Netanyahu. What world court? Okay, the world is tribal. Everybody is looking to take care of their own tribe. Okay, China is for China, Russia is for Russia, the United States should be for the United States. But this global court and this global world, anytime they say global, it's a scam. It's a scam. It's a way to extract a lot of money. It's just absolutely a scam. So anyway, that's my 2 cents on that. Back to stocks. So we covered banks. Let's move to healthcare, okay? Johnson & Johnson did well. United Healthcare did well. Eli Lilly did well also. They all reported in July. Why does that matter? Healthcare is a defensive sector, right, Steve?
It's a what sector?
It's a defensive sector.
Sure. Not only do they have great numbers, by the way, because, I mean, listen, we know that drug stocks trade at a much less valuation than any technology stock. But why do they move up? Because money doesn't leave the market and go back into your bank account and just sit there and wait. No, money managers rotate the money because they can't give the money back to the clients, right? They have to keep it moving, so they get paid their fees, that's the world of finance. So they'll move the money into a sector that maybe can make money. And when the market is uncertain, where is certainty? Certainty is in drug stocks because everybody takes drugs. It's just getting worse. You can't turn on TV, as you know. Every single channel. I don't care if you're watching Sesame Street. You're still going to get a drug stock on there talking about a drug that they have. So yes, very defensive. It just means that rotation is happening. All of those stocks, Merck killed. I can't believe these stocks jumped so fast, like they were just dormant. And then all of a sudden, as soon as the AI stocks lost their steam, people poured their money into these stocks very quickly, very fast. I don't know if I would keep doing it because I'm just going on a technical basis. I look at some of these stocks, the AI ones that have gotten clobbered. At some point, the selling pressure is over. So would I rather wait in a tech stock that can move a double when it starts to move again? Or would I rather be in a healthcare stock that is going to go 15% or something like that, right? Do I really want to do that? So I'd rather wait. That's the story with that.
So I want to explain the difference between you and I and virtually every one of our listeners and these private equity guys, okay? So you have explained the way you invest, Steve. You have a very, very narrow focus in trading. You pick a couple of stocks, you make your score, and you get back and you go to cash. So for you buy 2 stocks, okay? You make $120,000 score. Your bank account is up by $120,000, okay? It doesn't matter that you had $750,000 or $1 million in on the sideline. You just made $120,000 and you're happy and you weren't worried about other stuff at the time, okay? But so you and I, we have a problem in that we never have enough money to buy as much as we can. So we got to pick and choose our spots. And it's just like about everybody else that's listening to us. The private equity guys have a different problem. And you would say, well, that's a really good problem to have, but not really, okay? So if you're a $5 billion hedge fund and you only have half invested and you make a 15% return, guess what? You showed 7.5 for the year. You only got your 20% performance on the 7.5% that you made, and your shareholders and your investors are pissed as shit because you underperformed. It doesn't matter that you made 15% on the money that you deployed. They're looking at the whole ball of wax. So these guys, they've got to rotate. They've got to go into other things. They've got to carry the trade into a different sector because the money has to be working. The risk of not investing is greater for them. They have to keep it moving at all times.
Very, very good point, Bruce.
Yeah,
absolutely
yeah,
true.
yeah. All right, so if you want to take a pulse of the geopolitical environment, you look at GE Aerospace, who just came out with some good numbers, Lockheed Martin, RTX, and even Boeing. Boeing. Why do these companies makes news, and why are they important? Defense and aerospace are very, very sensitive to geopolitical concerns. So I don't play those stocks. I don't, but the sector is doing okay. The sector is doing
Yeah.
okay.
I was just thinking recently about why don't I buy some of these stocks that I can see technically are buys. I guess I'm so set in my ways on how I do things that I look at a Raytheon and I'm like, all right, does it move? It doesn't move fast enough for me. I like the action, right? Other people can certainly buy stocks like that and just sit tight. But when the market turns and you get the tech stocks and the more higher flyers starting to move, where do you think the money comes out of? The defense stocks and the pharmaceuticals, those come down. So if you're not going to trade and take money off the table and you're just going to sit and be a passive investor, well, then you know what? You may not make that much money in those stocks. So I'm not. It's not for me, but that's what happens with those.
Although with a company like Raytheon, I mean, the demand for Patriot missile installments is unlimited. Can't make them fast enough. We're going to need a lot of new bombs, for sure. We're using a great deal of them.
Yeah.
So, and I know the margins on that stuff is incredible. I mean, once the technology, you spend a lot of money developing a cruise missile or a Patriot missile installation. But once you got the technology, then it's just assembly line shit. So their profit margins go way, way up after a while. Okay, coming soon though, Steve, is the mega cap tech earnings. Microsoft July 29th, Meta July 29th, Amazon July 30th. These names drive the entire AI narrative, so it's going to be really interesting to see next week what happens. What are your thoughts?
I think they're actually going to have great. I'm not Microsoft. I mean, Microsoft's going to still have good numbers, but it's a software stock, and people hate software beyond belief right now. But I think the other ones, I think they're going to come with great numbers. I do. I think you're going to have a big outlook, a lot of spending. So the narrative is going to maintain the same as what was said last night with Google. And I think that if you stay in the stocks that can benefit from that, we're going to get a turn here. I know it's difficult, really hard to turn a market when you have the geopolitical issues going on. I mean, it's really, really hard because let's face it, oil is now creeping back up again. There's a lot going on. So yes, it's hard. But once you get a little bit of a subsiding of those tensions, the market's going to move again. So I think that the mega caps are going to do still great as far as the earnings. The stocks may not go anywhere, but that's because the outlook after that is spending. But it means that the rest of the market can keep going like we were, let's say, prior to a month ago, a month and a half ago, 2 months ago.
All right. In terms of the chips, Texas Instruments gave us an early read with some good earnings yesterday. You got Qualcomm coming out end of July, AMD coming out early August, and NVIDIA coming out late August. And I think that that's going to be an event in and of itself as well. Maybe we'll see a pop in NVIDIA after that.
Maybe, but look at what Supermicro did yesterday. Did you see that stock?
Yeah, I did. I did.
I mean, they of course it's a low price stock. When I say low, it's low because of other issues. They accounting irregularities, restatement of earnings. So you're thinking, oh, this company's got a management that's really fraudulent. Okay, that's why the stock. Now, if they're not lying, they came out and said that their backlog is $60 billion.
Yeah.
That is enormous for a company like that, 60 billion. And if they're able to be 60 billion, imagine what these other companies, these mega caps are, these big data center, these big hyperscalers, they should be tremendous. I think that, listen, until one of them, like Micron, says we have to lower guidance. Once that happens, all bets are off. Run for the hills. We're going to hit a major technology bear market. But who says that's now, right? What if that's not for 2 more years from now, right? So play what's in front of you, and what's in front of you is tremendous earnings.
All right, I agree. I agree. So besides that, we got coming in August retailers. Home Depot on the 18th, Target on the 19th, Lowe's on the 19th, Walmart on the 20th. You know, these stocks, if their earnings are good, it shows that the consumer is strong. And if the consumer is strong, the economy is strong, and the stock market is strong. So those retailer earnings are, even if you don't want to buy the stocks or own the stocks, those retailer earnings are extremely, extremely important to watch. Um, so we'll keep an eye
Target,
on that.
hold on.
Yeah.
Look at Target, up 40%. It's
Yeah.
still.
Yeah. 40%, you're right. You're right. It was a great call. It was a great call. You know what other call you made last week that was great? I mean, APLD is like a rock at 30 plus, and at 26 you said, "Now, buy, buy, buy." So,
Oh, I was crazy. I just thought about that. Yes, I was screaming, buy, 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 buy,
yeah,
buy,
yeah,
right?
yeah. You remember?
Yeah, I do remember that.
Yeah. Also, you did say uh, Intel would hit about 95 and bounce. It also did that. I
Yep.
have good news for everybody that owns Intel. The next time it approaches 140, I'm going to sell. This way, it allows the stock to go to 200, so all you guys can make the additional money. You know, uh, I figured I'd throw everybody a bone.
All right.
I have one more stock, Steven, then I'm going to go to you. PayPal. I think that the offer they got sucked. It was too lean. The company is a cash cow. Uh,
Yep.
my bet, and I could be wrong, but my bet is they're going to get another offer from somebody else because you know what happens? These money managers, these private equity guys, all these guys, they're looking for opportunity. Now they see a couple of companies make a bid for PayPal. They go, let's look at that. Wow, if they could get it for $60, that's pretty fucking cheap. Now all of a sudden, PayPal goes, nah, not enough for us. And I agree, it's not enough. And they go, does it still make sense for us at 75? Yeah. But how about 85? Because we don't want to lose it, you know? And then there's a competitiveness. PayPal makes a lot of money. It would be a really good investment for a lot of companies, including JP Morgan Chase, who certainly has the money to buy it. So I could be wrong, but I'm betting you see another offer way higher on PayPal in the next couple of weeks. So I would say on PayPal, buy, buy, buy. I like it.
I agree. You don't usually, typically, you don't get just one company coming out and doing a takeover. You get multiple people on the same stock, especially because PayPal's like, let's not take that offer. We deserve a lot more, which means that they know that there's more offers coming. So I agree 1,000% with you, Bruce, that this is a stock that should be going higher.
All right, what else you got? Your turn.
All right, hold on. I always got to pull up my list here. Hold on. I'm going to wear my reading glasses, which are really ugly and all that. But if I don't have them, I can't see. So let's see. All right, hold on. Hold the phone, everybody. Wow, Micron. I just happened to click on my thing, and Micron's unbelievable. This is what I meant about the stocks. So look. Oh, you know what I'm going to just say? SpaceX. Here we go. I get it. It's at a little under 113, 112 and change. It went public. What was it? 150? Was that the number, or 135? I think 135.
135.
Right, right. It's okay. Listen, you're getting people that are selling. There's going to be a lockup that ends where they can sell more stock in the next, I think, 3 weeks or something like that. That's why you're getting pressure on the stock. I think that once that we get to the lockup period, I don't know where the stock will be, but that stock goes higher. There's too much interest in SpaceX, without a doubt. So that one goes higher. No guarantee, people, but it goes higher. Here's one. Bloom Energy, we told everyone to buy Bloom Energy when it was I don't remember, Bruce. Was it like 180 or something like that? I don't
About
remember.
180, yeah.
Okay. Went up to 300 right after we said to buy it. I think it was like the next day it jumped like 80 points. So now with the market, it's pulled back down again. But Bloom Energy is it makes the power for the data centers. And although it's not in favor at this very second, technically you buy the stock on any weakness, you buy that stock. That's a buy. Okay? I'm going back to that one. I'll give you some more here that I really like. I still like Zeta. I know we're not going to talk about it, but I like Zeta.
August 4th
I still
earnings. August 4th
what, do you want to say
earnings on
something?
Zeta, Steve. August 4th earnings on Zeta. I'm betting they're really good.
Okay. I think you're right. The stock would not be holding here if they weren't good.
Yeah.
All right. You got Elf. We talked about Elf last year. Elf being the the cosmetic retailer, that kind of thing, right? Let's move on from there. Hold on. Ooh, the QQQs are getting smacked today like that. Hold on. I mean, I don't want to keep saying the ones that we to buy again, but I got to say you have to. So look at, all right. Why buy stocks that are down and going lower when you can buy stocks that are down because of the moment, but that have the ability to go higher? So I'm going to go to the ones, if everyone goes to their screen and looks to see what's positive for today with the NASDAQ down, I don't even know what the NASDAQ, but it looks like it's down like 600 points or something like that, right? Vertiv, VRT, $300 stock. We talked about buying Vertiv at like 175, came with the next day numbers or 2 days later. Remember, like a week later, it was up $100.
Yeah.
Now the stock's at 300. Buy Vertiv. I'd buy that one right here. I'd buy the other one that we talked about here. Hold on. Is Nibius, NBIS. I'd buy CoreWeave here, CRWV. These are the ones that were up, are down now. So do you buy these stocks like the chumps do out there when it's up 80%, or do you hold your nose and buy some of these stocks now that they've pulled back 30-40%? That's when you have to buy, people. Do not buy when your friends are telling you, oh my God, look how much money I've made. That is the wrong time to buy. Buy when your friends are saying, oh my God, look how much money I just lost in the market. That's when you buy, right? Hold on. I'll give you another one here. Hold on. Oh, I'm going to give you one, Bruce. I'm going to give you one. You're going to be like, no way. It is not a tech stock. It is a world player. And you're going to say, you've never even mentioned this stock. General Electric, GE. Okay. Mark my words. The stock is at $348. I have been staring at this stock since it was 250, 200, and not bought a share of it. It's at 340 something right now. I looked into it the other day and I saw how many different world companies that GE is part of and what they actually do. And when you talk about a market that is hesitant right now, they have their hands everywhere, whether it's in media, whether it's in power, whether it's in data, whether it's in AI, they're everywhere. So here's a stock that you could buy that everyone knows. Buy GE, General Electric.
So do you think that it's just they have a strong business model, or do you see a catalyst coming in the company that's going to drive the price higher?
What I see here is on any weakness, buyers step right in, number one. Number two, it is a Dow component. So the Dow has been lately outperforming the NASDAQ, number two. Number three, I think GE, which is remember they have spin-offs, right? GE Vernova, there are spin-offs. I think actually they're going to start accumulating and acquiring some of these stocks that are the future of AI that they haven't participated in because there's weakness here. I don't. I mean, I do some reading. I do a lot of reading when I'm laying there in bed, and I read, and I can see institutional guys saying, "Oh, well, there was a meeting between GE executives and this company, or that one," and I'm not going to give names because then you're going to say to me, "Well, geez, why don't I buy that stock?" I'm not doing that because then all of a sudden it's going to be me telling you takeover offers, and that's not what I do, right? I don't know anything more than anybody else, but I think that they're going to start acquiring, and when they start acquiring, you're going to see the earnings power. That stock can go from trading at a multiple of say 14 to a multiple of say 19. We're not talking about multiple of 50, but that little bit can bump that stock up another 100 points from here. So I buy GE also right here.
All right, man. That's cool. I want to give both your company and the company that I invest in a bit of a plug. We haven't done that in a while. If you're
Right.
out there, if you're a small business owner and you need a bank loan or a bank line of credit or an SBA loan and can't figure out the quagmire of requirements for the banks, Steve is high and tight. He can get you funded, and he can get you funded fast. So, Finance Freaks, the number 2 at gmail.com. Steve will get back to you and help you out a great deal. Also, aside from the stock market, because I'm not 30 anymore, I invest a great deal of money for income. If you want a very safe, steady, collateralized 15% annual return. I do B2B lending as an investor. Never have missed. I've been in it for about 13 years. Monthly interest paid directly into your checking account. Also, email us at financefreaks, the number 2 at gmail.com. And I'd say that's about it, right, Steve?
Very good. I agree.
All right, joke time, joke time. I got a friend from Holland. He married a Filipino woman. They had a child. I guess they consider the child a jalapeno. No?
That is ridiculous.
No? All right, wait, let me try again. I met a woman. She was Chinese and Italian. Her name was Linguini. Better?
Better.
All right. Guys, thank you. We'll talk to you next week. Have a great week. Make money.
See you later.